Hey friends, after a strong rally in the initial 10-11 months of FY24, the sentiments have clearly turned negative for the stock market. Especially March month has been brutal so far for the mid and small cap stocks. I've recently done a video on whether you should sell mid cap and small cap stocks or not. So if you haven't watched that video, I would strongly suggest watching it. I remember that I mentioned that overall small cap index is trading at around 15 to 20% premium, and there is certainly a selling pressure. Now, when there is selling pressure on the entire index, it impacts even the fundamentally strong companies. In fact, at the individual stock level, the correction is even brutal. But like I said in that video, this selling pressure would be short term. In the long term, the growth story of our economy is still intact. It means if you are a long-term investor, then you don't need to panic. Having said this, I keep saying that it's important to have a fine balance across large, mid and small cap stocks. Because during bull run, mid and small cap can rally much more than large cap, but they also fall the most during bear market because mid and small caps are highly volatile. Also, I think that this correction in mid cap and small cap sector is a wake-up call for those who have started investing post-COVID and think that they can double their wealth in no time by simply investing in mid and small cap and completely ignoring large caps. Today's small cap index is down by about 10-15%, but many individual portfolios are already bleeding badly. God forbid if, let's say, the broader market corrects another 10% from here, then more than 50% investors would leave the stock market. Hence, it's important to analyze your portfolio and figure out how much percentage you have allocated across large, mid and small cap. In my opinion, 50% should be kept in your large cap and the remaining can be kept in mid and small. But again, it would depend upon your individual risk appetite. So if you already have a good balance across large, mid and small cap, then you don't need to rebalance your portfolio. But if you have higher allocation in mid and small cap segment, say 70-80%, then maybe it's time to rebalance your portfolio and have higher allocation in large cap. So that can be done either by booking some profit from small cap and mid cap and investing into large cap. Or if you don't want to sell mid cap and small cap stocks, then you can consider investing whatever incremental money you have in large cap until you have a fine balance across large, mid and small cap. So when you invest incremental money in large cap, it would automatically reduce your mid and small cap allocation. Having said this, let me repeat, if you are holding fundamentally strong mid cap and small caps, this correction has created great buying opportunity. In fact, many mid and small cap stocks have already corrected 30-40%. And looking very good in terms of valuation. But you don't need to rush in. Let the dust settle down. I'll certainly discuss potential mid-cap and small-cap stocks that are looking promising after this correction. In fact, last month only I discussed promising mid-cap and small-cap stocks that have corrected. So we'll cover more such stocks after this recent correction. But for this video, if you want to rebalance your portfolio by increasing allocation in large cap, then the question is, what are some large cap stocks to consider adding during this current volatile market? So let me be honest, a lot of large cap stocks have also rallied a lot and trading at higher valuation as compared to their historical valuation. But there are still a few pockets of opportunity. So I've identified top large cap stocks to consider adding that can help you rebalance your overall portfolio. But before we begin, a disclaimer that this video is only to share my knowledge. Please don't blindly buy or sell anything. Make sure that you do your research before taking any investment decision. Alright, let's get started. So first two stocks are from banking sector. The simple reason is Indian banking sector is one of the best phase of growth with decade low NPA. Moreover, from valuation perspective, banking sector is looking most reasonable among other sectors. Although there is some net interest margin contraction pressure in near term, but for medium to long term, banking sector is bound to do well. So first stock is without a doubt ICICI Bank. It's been a part of my Diwali pick from last 2 years now. Needless to say, ICICI Bank is one of the best phase of growth in last many years with consistently high growth across advances, deposit, operating profit, fall in NPA and sharp jump in net profits. Under the leadership of Mr. Sandeep Bakshi, ICICI Bank has outperformed its peers including HDFC Bank. Now if you look at share price, 1 year ago it was in the range of 800 rupee and then jumped to 1000 rupee and then it consolidated in the range for almost 7-8 months and now it is already touching levels of 1100. Even at current levels, it is trading at a P ratio of 18 and price to book of 3.5. Then second bank in my list is HDFC Bank. This is one of the most controversial stock at the moment where people are divided into two groups. On one side you have people who like HDFC Bank and on the other side, people who think HDFC growth story is over. Personally, I still believe in the bank. Yes, after the merger with HDFC Limited, HDFC Bank has become huge with current market cap of 11 lakh crore. But at the same time, India has huge opportunity in banking space. So HDFC Bank would still continue to grow. Yes, it might not grow as quickly as mid-cap banks, but it would still grow at decent rate. More importantly, today HDFC Bank is available at a PE of 16 and price to book of 2.8. So today HDFC Bank is trading at lowest valuation in last 15 years. Last time it was available at these valuation was during 2008 housing bubble. Again, I'm not saying that HDFC Bank would double from here. All I'm saying is it is looking very attractive in terms of risk reward at the moment. And if you want exposure in blue chip stocks, it can be a good option after ICICI Bank. In fact, I also like Kotak and Axis Bank, where Kotak is trading at a price to book of 3 and which is again historical low, and Axis Bank price to book is 2.5. So all these banks are looking solid, but if I have to pick just two banks, I would pick ICICI and HDFC Bank. Next stock in the list is ITC. If you recall, I did a video on ITC a couple of years ago where I kept my faith in the company during its worst phase when it was trading at levels of around 200. Today ITC is trading at more than 400. Even after that, if you look at the valuation, its PE is 25, which is way lower than its peers. You would know that ITC is slowly turning itself from cigarette major to a FMCG giant, and this progress so far is phenomenal. Not only that, their hotel division is also growing exponentially. And there are discussions around demerger as well. So that would again unlock the potential in ITC. Now recently there was news on BAT selling stake in ITC. So BAT is British American Tobacco Company that held around 29% stake in the company. And yesterday it sold around 3.5% stake. After that, ITC share price actually jumped. It's because market is considering it as a positive sign and it could lead to re-rating of ITC. Again, I'm not saying that it would double from here in next 1 to 2 years. So you need to tame down your expectation. But it's a great compounding stock to consider in your portfolio. It also gives a good dividend with current yield of around 3%. The next stock in the list is Reliance. Again, I don't need to explain why Reliance. It holds India's largest two entities in two largest segments, Jio and Telecom and Reliance Retail and Retail segment. Needless to say, both segments are bound to grow. And its third segment, which is oil to chemical, is a profit-making machine which it uses to grow its other business. Reliance has beautifully transitioned itself from oil company to a new tech-savvy consumer company. If you look at share price, Reliance consolidated in the range of 2,400 for almost 2 years, and recently it has rallied to around 2,900. Valuation-wise, it is trading at a P ratio of 27, which is reasonable. So risk rewards are in favor. Now next two stocks are from energy theme. So energy is the fundamental block in any economic growth, and energy is mainly classified into renewable and non-renewable, which is mainly thermal. Now renewable is again divided into solar, wind, and there's third option which is green hydrogen, and that is one of the most promising option. In future, Indian government has huge plan to generate power especially from solar, and I think that in future green hydrogen would play a key role in power generation. And that's where I would like to keep my faith in two biggest power companies in India, which are actually PSUs. It's NTPC and Power Grid. I think that both these PSUs would play a key role in India's energy transition and would create wealth for the investor. NTPC today is trading at a PE of 16. Although stock has rallied a lot in last 1 year, but valuations are still reasonable. Likewise, Power Grid is also rallied a lot, but still trading at a PE of 15.7. So worth considering these two PSUs from energy theme. Although in this space, my preferred pick is Tata Power, which is also part of my Diwali picks in last 2 years, but it has also rallied a lot. And at current levels, the valuations are stressed at a PE of 35. So again, it is a great stock to add in a systematic manner. Now next stock in my list is from aviation sector. It's Interglobe Aviation, which is the parent company of Indigo Airlines. There's strong tailwind in this segment. I recently discussed about Indigo Airlines and how they've created a niche in this capital intensive aviation business with its no frill low cost model. And today it commands a market share of more than 60% in Indian aviation sector. And from investor perspective, the best part is that it is making a lot of profit. Company is consistently expanding its presence in India as well as destination outside India. Last year, Indigo has placed record order for 500 aircraft. So that also speaks a lot about company's future plan. Currently it is trading at a P ratio of 17. I think Interglobe Aviation is one of the best large cap stocks to consider at this point in time. Now the next picks are from four-wheeler auto space. Indian four-wheeler auto industry is extremely underpenetrated with just about 20-25 cars per 1,000 people as compared to UK and US that have nearly 900 to 950 cars per 1,000 people. And car is aspirational. Every Indian aspires to own a car. I think as our economy would prosper, four-wheeler auto industry is bound to grow. Although there is still competition from foreign players like Hyundai, I think top four-wheeler Indian automakers are bound to do well. and it includes companies like Tata Motor, Maruti Suzuki and Mahindra. I think all three are great. Now my most preferred pick from this space is Tata Motor, which is again part of my Diwali 2023 pick. But Tata Motor has rallied a lot in last 1 year. In fact, stock has more than doubled. Even Maruti has generated more than 30% return in last 1 year, and Mahindra stock is up more than 60%. Today, Tata Motor command a PE of 17.5 and Maruti PE is 29, Mahindra PE is 21. So valuation wise, all three are looking reasonable. Hence for long term, I think all three companies would continue to do well. So worth considering SIP. But again, my first preference would be Tata Motor, then Mahindra and then Maruti. There are also great two-wheeler auto stocks including Eicher Motor, TVS Motor, Hero Moto and Bajaj Auto. But I think that this space is very competitive with new EV players trying to disrupt the space and the fact that there is very low entry barrier in two-wheeler space. So I would like to prefer four-wheeler auto player. Having said this, all these four two-wheeler companies are also great. Then another stock is from auto auxiliary space. It's Samvardhana Motherson. This is also my preferred pick and I've done multiple videos in the past. So after a sharp decline of around 60%, stock has already jumped 70%. Still it is trading below its all-time high of June 21 level. Although today its PE is looking higher at 47, but company is expecting to grow earning at a higher rate and hence valuations are looking reasonable considering the future earning potential. Now next stock we have is from IT sector. Unfortunately, my preferred IT companies have already rallied and trading higher than their median valuation. For example, TCS is trading at a PE of 33, which is again nearly 10% premium to its median PE. Then my most preferred pick in this pack has been HCL, but it has rallied nearly 50% in last 1 year and trading at a PE of 28, which is nearly 40% premium to its median PE of 20. Only Infosys is trading near its median PE of 27-28. So at the moment, I would suggest considering Infosys in the portfolio. Then another theme is defense, where you have Hindustan Aeronautics and Bharat Electronics that would be a huge beneficiary of indigenization of defense manufacturing. But again, I find valuations a bit stressed at the moment. HCL is trading at a PE of 34 and Bharat Electronics is trading at a PE of 40. In fact, HCL is already part of my Diwali 2023 pick and has generated great returns. Considering the huge potential in the defense sector, both these stocks are worth adding in SIP mode. Then I've got two more picks from consumption theme. First is United Spirit, the parent company of top brands like your Black Label, McDowell, Black Dog, White 69, Signature, Smirnoff, Captain Morgan, and the list goes on. Although the company commands a premium valuation with a PE of 63. But it is actually an undisputed leader in the spirit sector of India and the demand for alcohol consumption is growing significantly. And my final pick would be the new age food company Zomato. Earlier I was skeptical on Zomato, but after the recent turnaround, Zomato is looking promising. Although it is slightly risky and could be volatile, but worth considering in your portfolio. So this is the list of my top large cap picks at this point in time to consider accumulating. If I summarize, it include ICICI Bank, HDFC Bank, ITC, Reliance, NTPC, Power Grid, Interglobe Aviation. Then four-wheeler auto sector, I would pick Tata Power, Mahindra, then Samvardhana Motherson in auto auxiliary, then Infosys in IT, Hindustan Aeronautics, Bharat Electronics in your defense, and then United Spirit and Zomato from consumption theme. By the way, I also hold some of these top stocks in my portfolio that I discussed in my weekly video series where I share one exclusive video every week, and recently I shared my own portfolio. You can get the details on my website or via the join button. Again, this is not a buy or sell call. The idea is to share my conviction with long-term investors. Apart from this, there are many other great companies in this list, but I don't find a lot of valuation comfort at the moment. One of the hot stock in large cap today is Jio Financials. I have already done a detailed video on why I'm bullish on Jio Financials. But my concern is that it has already rallied significantly, making it expensive. Then there's a list of stocks I would love to buy if there's correction. That include Titan, which again just doesn't correct. Then DMart, which is again excellent, but valuations are still high. Then Varun Beverage. It again doesn't give much buying opportunity. Then Tata Consumer is also very promising but expensive. Fifth is Nestle, which is again excellent but expensive. Sixth is Pidilite, parent company of Fevicol. Seventh is Tata Trent. This stock has also more than tripled in last 1 year. I remember doing a video on Trent at levels of 1300 and today it is at more than 4000. So at the moment looking expensive. Apart from this, there are a few brilliant large cap businesses that are currently struggling at the moment due to various reasons. First is Asian Paints. Stock is now trading at nearly 3 years back level, but the problem is new entry of Grasim that can potentially impact Asian Paint margin. Although valuation wise, Asian Paint has corrected significantly, but I would like to wait and watch this space. Another stock is Bajaj Finance. Again, great company, but it always commands a premium valuation and there is new competition from Geo Financials. But again, worth keeping an eye. Then you have Divis Lab, which is also struggling at the moment, but a great business for long term. And finally, you have Hindustan Unilever, which is struggling due to your current slowdown in demand, especially in rural part of India. So this is it for this video. I hope it gives you a good sense of what you can consider buying. Again, let me remind that it is not a stock tip. I just want to share my knowledge. So please do your own research before investing your money. The idea behind this video was to help you identify fundamentally strong large cap companies that can be considered as part of your portfolio to make a fine balance across large, mid and small cap. Also, please note that it is not that large caps are immune to correction. There can be 10-15% correction here and there, considering we have general election and US interest rate would play a significant role. So if there is any correction, it would make the stock even more attractive. And like I said earlier, I would also do a video on potential mid cap and small cap stocks to consider accumulating after this correction. Now let me know what percentage of your portfolio is in large, mid and small cap. So if you find this video useful, do share it with your friends, and for more informative content, click on that subscribe button. I'll see you next video. Till then, take care.